For many years, economists have been exploring the notion of exchange of value and exchange of trust. Throughout history, whenever an economic exchange had to take place, trust had to happen at the same time. This trust used to be enforced either with social norms, with religion historically, with violence, with laws, with institutions, with corporations, and more recently with technologies. We're noticing a lot of advancements in technology. We're noticing the advent of new technologies that have trust embedded in the way that they're designed, such as blockchain technology, which, as I said in my previous talk, is becoming quite mainstream. So today here we are discussing together the notion of trust and how we can trust each other and other entities in the digital age. And we have a brilliant panel here with us. We have Mr. Chris Casapinta from Domus. We have Mr. Kenneth Farrugia, Chairman of FinanceMalta. And we have Natalie Smolenski from Learning Machine. Welcome, all of you. And I would like to kick off this session by asking you just to introduce yourselves and what you do.
Hello, everyone. I'm Chris Casapinta. I've set up and I'm currently running Domus. So Domus is a Luxembourg-based company where we help investors, venture capitalists, set up the corporate structures, funds, and help them finance their activities, and eventually also help them with the corporate governance.
Hello, good morning, everyone. And I join Abdalla and Chris to welcome you to this conference. I'm Kenneth Farrugia. I'm chairman of the board of FinanceMalta, which is the national promotional body for the financial services industry in Malta. In my day job, I'm a banker by profession. I've been in banking for 32 years. I sit on the executive board of Bank of Valletta, and I'm responsible for investments, banking, and digital banking.
My name is Natalie Smolenski. I am, by background, a cultural anthropologist, so I'm very interested in questions of value and social trust. I wear two hats at Learning Machine. I also lead business development. And Learning Machine is a company that has worked with MIT to produce currently the only open standard for issuing and verifying official records on the blockchain. And Learning Machine, as a commercial company, has also developed a series of products to help institutions do that.
All right, so maybe, Kenneth, I'm going to start with you. We are moving from a time of internet of information to the internet of value and the internet of trust. What's your take on this, being a chairman of an institution that has been dealing with information in general and spreading information about the financial sector in Malta? What is your take?
Look, trust is the foundation of any business, but particularly insofar as financial services is concerned, it's perennial, it's pivotal. And if you look at trust itself, it has different facets. So that there's trust between the client and the financial institution, but there's also trust between financial institutions themselves. And when this broke down, and there were many instances in the past when this level of trust has broken down, it wreaked havoc. If we just look at what happened in the financial crisis in 2007, 2008, when there was literally, the trust broken down between financial institutions. Wholesale banking came to a complete halt.
Correct.
And banks, it's not the trust between clients and banks. And we've seen some scandals there on mortgages and on investments, and heavy fines being levied on financial institutions. But when the trust breaks down between financial institutions, not just in the same country, but in Europe as a whole, it wreaked havoc. And some financial institutions literally hit the wall because they depended on that trust between financial institutions for their business model. They depended on credit being extended between financial institutions, verified through agreements between these same institutions. But when that broke down, it wreaked havoc. And it wreaked havoc not only insofar as the banking sector is concerned, because banking cuts across all economic sectors. It wreaked havoc at the business level. It wreaked havoc at the client level when they came to process transactions. So preserving trust is in my view, very, very, very important. Now, the facets of trust are various. I think within the financial world, particularly insofar as clients are concerned, we speak about the importance of verification of identity. And if you look at the traditional medium of exchange in financial services, which was traditional cash, there was no issue of trust. You had 10,000 euros, I had to pay 10,000 euros, I passed on the cash to you. But then we went to electronic payments. And then the much needed verifications came in, verifications between institutions, through SWIFT keys, through SWIFT codes, through particular keys that were exchanged between the client and the institution remitting the money on behalf of the client. But it's becoming today, it's evolved today to a degree that the situation, the system itself is becoming inefficient. And I take the example of a business coming to set up, let's be practical, a business coming to set up an operation in a country, right? So the institution has to approach a bank to open a bank account. So the bank would need verification documents, identity, memorandum and articles, all have to be notarized, certified. Some banks don't accept digital copies, they want the hard copies. And this means that the extent of trust between financial institutions and service providers and the client to the industry has somewhat fizzled out, has reduced, diminished itself. That's the first step, right? But then the firm needs to appoint an audit firm. And it has to go through the same rigmarole of requirements all over again. It has to appoint a legal firm. Again, they have their requirements on the KYC side. So intrinsically, I think trust has somewhat fizzled out and diminished itself. And I think blockchain, in particular, can play a very, very, very important role in expediting this whole process.
In fact, you're quite correct. I mean, like you rightly said, since the financial crisis, trust has eroded massively, both from the consumer side towards the financial industry in general. And in a time where the financial industry was quite busy trying to solve a lot of the major problems that they have encountered since 2008, 2009, there has been quite a large number of advancements on the technological sides, and we're noticing a lot of innovation that is related to the financial industry that's completely spearheaded from technology companies. And that leads me to the question to Natalie, coming from an institution that's more on the technological side, and given your interdisciplinary background in quite different disciplines, and in light of what Kenneth just said, how do you define trust within the context of technology-enabled economic and information exchange? Because as Kenneth has highlighted, at the moment we have a process where financial institutions are requiring to collect a lot of information. The models that they're using are quite legacy-based. As we all concur, technology is a major solution. But when it comes to the definition of trust itself, we notice that trust is not being defined in the same way from a technology standpoint, and also from the regulated entity standpoint, which is the financial institution. What is your take on that, wearing the hat of a technology institution?
Sure. So I think there are at least two ways to think about trust in the context of a technology infrastructure. One is trust in the integrity of the transaction. And this is what the Bitcoin blockchain in particular is solving for. Basically, I can be absolutely sure that a transaction conducted using that blockchain went from one party to another and is sound and was not double spent, so was not reproduced fraudulently. That is a separate question from the question of identity. So who is it that's transacting and to what end? And there are blockchain-based decentralized identity solutions that are attempting to move into that problem space. So for example, Learning Machine co-chairs the Credentials Community Group for the W3C, which is an international web standards organization. And that work involves verifiable claims, which is a claim structure to confirm the authenticity of a particular type of transaction that is a claim that is being made, or an attestation that is being made. There are also new technology forms like decentralized identifiers, which attempt to provide a secure anchor for identity that's not reliant on a single centralized body to curate and maintain. So there are many different questions with regards to the trust domain that blockchains provide multiple types of solutions for.
Brilliant. So moving it now to the finance side, or someone from the financial industry. Chris, as someone who's quite involved in the fund industry, and you understand that when it comes to even your natural day-to-day operations, you're a very heavily regulated industry. Now with these advents of technologies such as blockchain technology and the lack of regulation on the blockchain front, but also the requirement and the need to move towards this far more superior technology, which enables us to actually perform certain tasks better, faster, and much more scalable manner. What is your take on the regulatory side when it comes to the inclusion of technology, and who should regulate that? Is it Financial Services Authority? Is it a different body? What is your take on it?
Yeah, no, definitely it's a point that we're always sort of discussing internally. It's a key development in our business, and possibly a key competitive advantage or a challenge if we don't deal with it properly. So internally we've got challenges with doing things in a timely manner. There's a lot of volume of data that needs to be dealt with, and unfortunately there's also a lot of duplication of work that is done, as Kenneth mentioned earlier. So it's quite frustrating. Obviously we need to deal with things in a timely manner. You know that technology exists, but you still need to duplicate certain things. So obviously wregulation comes in. So I would think that from a sort of an MFS, say the Financial Services Authority, in this case in Malta, the NFSA, would need to obviously come up with sort of regulatory standards which would allow the blockchain to be a big part of our business. Now whether it's just the MFSA or a conglomerate of other regulators, one need to discuss that. But definitely regulation is a key thing in this whole process.
All right. Moving back to the technology side, and being part of a company that is innovating on the blockchain side, how is something like cybersecurity being addressed given the technologies that are being built by learning machines, for example?
Right. So that's a great question, and it's really important to make a conceptual distinction between the blockchain layer itself and then the application layer. So blockchains have infinite applications, much like, if you were to ask someone in 1993 what they imagined the internet could do, the initial use cases might be things like posting on message boards, sending email, accessing research, but no one would have predicted, YouTube or Facebook at such an early stage. And yet those are all applications that have made the internet basically an infrastructure for everyday life for people all over the world. Blockchains are kind of in a similar place right now, and a lot of the confusion about them has to do with the application layer. And that's really where many of the security pitfalls can be found. So in the case of the Bitcoin blockchain, for example, it's actually the most secure transaction network on the face of the earth right now. But many applications that have been built to use the Bitcoin network have been notoriously insecure. And this is why it's important to leverage governance instruments like, for example, the GDPR, which is set to come into effect next year in the EU, to address that application layer interface with blockchain technologies.
Brilliant. I'll take it back to Chris before going back to Kenneth. Chris, many people are skeptical about the perceived risks of involving new technologies in general. We see always resistance from different industries, be it the financial industry, the healthcare industry, government records keeping in general. Do you think that people are ready to embrace new technologies and to adopt them? And if not, what are the main hurdles from a practitioner standpoint?
Yeah, obviously, as I'm just putting my hat on as an accountant or as a professional, so obviously we're always under a lot of pressure about data protection, about sort of making sure that our clients' data is kept in a secure place. We deal with clients who are also very sensitive over their information, their financial affairs. So obviously, people are very skeptical when it comes to new technology. However, as mentioned earlier, we got to a stage, I think, that we're so inefficient as we are, that I think even clients themselves now will definitely be open to technology just to get rid of, let's say, the certain level of bureaucracy that exists today. Unfortunately, yeah, there will be some people who will resist that change, but as we said, sort of with regulation, these people feel more comfortable, and there are new regulations coming in, as mentioned, like GDPR, which would put a lot of pressures on organizations like ours to make sure that our sort of data security is kept up there.
I can completely relate to the fact that clients actually want to embrace more technologies, and people are not getting any younger, and millennials are getting older, and they're starting to consume products, and they'd rather deal with technologies and machines than actually have to go through a very tedious human-to-human interaction. So it's something that I completely relate to. Kenneth, you wanted to add something?
There's an extension to that. The issue of inefficiency and the concerns around deploying technology within financial institutions does not lie within whether just clients will adopt the technology or whether you have the capacity to implement the technology, because regulations have brought significant burdens on financial services operators to be able to deploy technology and assign capacity to deploy the technology to address the regulatory reporting requirements. But I think there are other implications to that. First of all, it's the regulatory framework itself. And the regulatory framework has, in essence, to capture the regulation of this new technology. And unfortunately, I do not think that regulators have kept up to pace, to ensure that they have an overarching regulatory framework to regulate the deployment of this new technology. But then there's another important layer to that, which is the legal framework and the courts of law. Because ultimately, the concerns of any financial institution or any institutions or personal clients dealing with financial institutions is whether they have the appropriate redress in the courts of law. And unfortunately, and we see this in the non-traditional financial sectors, like in the hedge fund space, that there isn't sufficient case study and sufficient expertise, depth and breadth within our courts of law, not just in Malta but also abroad, to cater to address issues that may arise with banks deploying this technology. And I think that needs to be catered for as well.
So very briefly on this point, Kenneth, and I understand that in your position in FinanceMalta, you're actually promoting Malta in general as a jurisdiction that is friendly for the financial services. But given everything that we've discussed and technological points that Natalie has addressed and what Chris added from a practitioner standpoint, how do you see Malta taking lead in the blockchain space, given the fact that the government has announced a blockchain strategy coming quite soon? And will the government endorsement actually help people to trust technology much more, since the topic is mainly about trust?
No, for sure. I think the fact that the government, through the cabinet, has embraced the importance of putting in place a strategy around blockchain, I think that's a very, very strong endorsement. And I think the recent event that we organized on blockchain, where we had a record number of attendees, representatives from across different economic sectors, not financial services, is a testimony to that. Clearly, I think insofar as blockchain is concerned, if not being front runners in this, we can be very, very fast followers. And I do hope that we will take the required initiatives in progress. I know that the blockchain consortium has been set up. The blockchain task force has been set up. There are I think, apposite people around the table to articulate the required strategy around blockchain, to put this in motion. I do hope we don't end up like what happened in the fintech space, where we have, some catching up to do. I think the industry is clamoring for, a regulatory sandbox to enable fintech operators to come and operate in Malta, the absence of which I think has slowed down, the development of fintechs in Malta. So we've seen fintechs coming here, but I think if we had this sandbox in place, we would have attracted much more operators to the market. Agreed,
and I still believe that we have a historic opportunity in Malta, because we have a strong financial services infrastructure, we have a strong ICT sector. Bridging the gap between finance and ICT would lead to a very solid fintech framework of fintech industry in Malta in general. Natalie, coming back to you, I would like to hear some concluding remark in relation to the use of blockchain technology in general to enable trust from a thought leader standpoint, as you always do.
Sure. So I think one of the most important things to remember about blockchain is that it's not merely a payments transaction network, but in fact, an entirely new social infrastructure. To use the example of financial services, as important as they are as trust brokers, there are 2.5 billion people in the world who are unbanked. And that number is only scaled to grow as population increases. So the limitations of that reach suggest that there is room for a disruptive technology to come in and actually connect people into a global financial system, but one that is decentralized and unowned by any particular nation state. This affords a type of possibility for human value creation and mobility that is unprecedented in human history. It also requires social innovators to come in and think about questions of digital identity, to think about questions of surveillance, of data privacy and ownership. And these are all things that Learning Machine has been writing about in the context of self-sovereign identity, which is a term for identity that is owned and controlled by the individual rather than by a corporation or a state. And this is something we can talk about in person later on if you're more interested, but that's just kind of a high-level view of what the implications of the technology could be.
All right. I believe our time is up. Thank you so much, our distinguished panelists, Chris Casapinta, Kenneth Farrugia, Natalie Smolenski. Please, a big round of applause for our thank you so much.